Alright, so today we're going to be doing a top-down analysis of this trade that I took in GU. I took this sell down here in this New York session on May the 3rd. So 2 days ago, today is the 5th, we're going to be talking about this trade, why I took it. I'm going to talk about my analysis, and we're going to maybe do some projections for Friday, for tomorrow. All right, we're going to look at it. We're going to see what we see. But at the end of the day, we have to wait for them to show us their hand, for the dealers to show us their hand before we, take any trades. So we're not just going to go short or long, because I think that's what it's going to do. I'm going to wait to see my confluences, to see my triggers, and then that's when we take the trades. So this right here is the 5-minute chart. This is May 3rd. I'm going to zoom out so you can see what is going on here. So this is the beginning of the day right here in this blue box. This is 5 p.m., the Asian session. This is the range condition right here. We have range. This is the beginning of the day. And as you can see, we came up, 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 up. Well, in the New York session, it kind of came up a little bit and sold. But by the New York session, it came all the way up, back up. So you could have got a nice trade in here, about 50 pips. If you were up, but I like to trade GU during the New York session because it really gives me those moves that I'm looking for lately. About 2 years ago, I used to trade GU during the London session, but markets change, conditions change, so this is where we're at now, New York session. So it came all the way back up, and it came right to this area that I was looking for it to come to. And when it got to this area, I like to look for some type of trapping, because this is a stop hunt. So I like to look for some type of trapping. And I like to look on the 5-minute chart sometimes. It really just depends on where I can see the move clearly. I'll either go to the 15 or the 5-minute chart. But for this trade, I saw the M just so clearly on the 5-minute, because you can see it goes up, down, back up. And I actually got in after this shift candle right here, so you can see what it looks like on the 15-minute chart. It's probably some dojis. Yeah, a doji candle right here to the stop hunt box right in the beginning of New York session. So I'm looking forward to go short. All right, and the reason we were looking for reasons to go short, is because if you start at the D1, the day one chart, the daily chart, you can see we're in a downtrending market. So the EMAs, all of the EMAs are pointing downward. The 50 is going down. The 800 is kind of steady, but it's the 800. It doesn't move that often. The 50 is going down. The 8 is going down. The 13 is headed down. Price is headed down. So I wasn't looking for any buys at all. We're in a downtrend. All right, and then when you go to the hourly chart, you can just see it breaks it down a little further. Everything, well, this is range condition right here. It's been really ranging. But if you back out, you can see the previous days. It's a little bit too far back. But as you can see, yeah, it's been going down, down. Price is dropping, it's dropping. And now it's kind of oscillating. So I've been looking for sell trades, but also short TPs. It really broke through this. It really broke through this range right here yesterday. This is what I was waiting for. But all this week, really, I've been having short TPs. Short TPs. All right, so let's get back to this trade on the 5-minute chart. I don't know why it keeps taking me back to April. We're on the May 3rd. All right. We're going to talk about that trade also. All right, so I'm already looking for a sell trade. Reasons to go short. Looking for reasons to go short. So once I saw price come up to this area, this is my area of interest right here. That's why this box is here. This is the area of interest. Once I saw it trapping, going up and down, making this M formation, this double top, I entered right here. And my take profit was at this blue tracer, which is the low of the day. So I like to take my TPs where I know for sure that price is going. Well, it's not for sure, but where price is likely to go. It's highly likely. So I put my take profit right here at the low of yesterday's low, because that's yet again another area of interest for me. So this red box here is all of New York session. So price just continued to drop, continue to drop. This is another area where I actually got another position once it pulled back to the blueberry or to the 800 EMA, and it continued to drop, continued to drop, continued to drop. So I got about 60 or 70 pips on this trade, just getting in, looking for the M formation. I only trade M's or W's. So yeah, this was a perfect clear M. I mean, it really doesn't get any better than this. It was so clear. So this was the trade for May 3rd, and the reason I took that trade. This was my trigger here. Once I saw this candle close down, this engulfing candle here, once I saw this engulfing candle, once I saw it come up and then drop, and this engulfing candle right here and break through this EMA, that was my trigger to get in. And it was no drawdown at all. This trade was no drawdown. And I believe I had like a 10 pip stop loss, because my stop loss goes above here. Because this is where the banks, this is where they're trapping. So up here, this is like, it's all blocked out. Price is not coming up here. This right here, let me draw a line. They don't want to go above this price right here. So really you just need your stop loss to be 1 or 2 pips above this area just for the spread. So I put about 10 pip, I had about a 10 pip stop loss just to cover this area, because I got in after this candle closed, just to cover this, and about 2-3 pips above here. So just in case they came back to this area and tapped it again, I wouldn't get stopped out from the spread, because sometimes they open up the spread just, and ping you out, hit your stop. So that was my stop loss. It was actually about here. So it was a really tight stop loss, and that's how I like to have my stops. So moving on to the next day, I actually took a trade again because it was pretty clear. It wasn't as clear as yesterday, well, as the 3rd, but when the 4th came, you can see it came right back up to this stop hunt box, my area of interest, made the M, and I like to see it push really hard up to that area. So these nice big green candles, 1, 2, 3, up to the high, and then oscillate and make this nice M structure, or this double top, and then enter. I entered right here on this candle. You really have all these candles. You have all this time to, do your analysis and, decide. But once you see it goes up, you're just waiting for your entry. Waiting for the first leg, and then the second leg is here. And I did have a little bit of drawdown, but again, my stop loss just went above the wick. Really tight stop above the wick, and it dropped. And I got about 50 pips on the 4th. Again, I normally put my take profit to the low of the day right here at the blue tracer, because it normally rejects once it gets to the area. It may continue to drop, but because I saw it was in range condition, I just took short TPs, and I'm just looking for price to go, to these areas of interest where, I know it's going to go. See, it's just oscillating. It's not really breaking the structure until yesterday. It broke the structure yesterday. But now that I see it broke through this area, my next trading day, I'm looking forward to stop hunt high and drop again down to this area right here where this tracer is, this orange tracer. But if it doesn't, then it just doesn't. If it stop hunts low and rises, as long as I see that it stop hunts and I see that they're, inducing people to go a certain way, I'm going the opposite way. But you have to look for your triggers, which is the aggressive move down to the low, or the aggressive move out of the Asian box, out of the Asian, this is the Asian session, the aggressive move to the low, or the aggressive move to the high, and then trapping, because sometimes they'll just push out and just keep going. So you have to see everything, all of your confluences. You have to see them push up, trap, make your M or your W formation. If it's going down, then you have to see it push down, make your W formation, first leg, second leg, wait for your confirmation candle, and then you take it in the opposite direction of the inducements, because the bank's job is to make you see something. So when they come out and they're pushing aggressively to one in one direction, you know it's a fake out. What's going on with my chart? Yeah, you know it's a fake out. So just like here, for example, on the 3rd, you see these huge candles. It'll make you think this is the way that it's going. This is the way that it's going. It's buying, it's buying, it's buying. Big, huge candles, especially right here once it broke this area. Once it broke past this area right here, the Asian box, huge candles to the high. It's making people think that it's going long. So you always have to think about, what is it that they're trying to make me see? They're trying to make people see a long position here. And then as soon as you go long here or go long here, they're snatching it back. Then they bring it back up, give you false hope. And then they snatch it away. Snatch it away. Snatch it away. So once you see these aggressive moves, this is when I start thinking, okay, this is what they want me to see. They want me to see it going up. So I'm already looking and thinking in my mind, because I know it's a downtrend. This is a pullback. M formation. I'm going short. All right, so I'm thinking that we're going to do this probably twice a week. If you like the content that I'm putting out, give it a like, a comment. If it's anything that I missed or that you want to know, any type of details that you want me to start sharing, put a comment in the comment section. Don't forget to subscribe, and see you tomorrow.